Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Monday, April 6, 2026. Stocks ground higher into the close, but it didn't feel like a chase at all. The theme was simple: cautious risk on. Traders are still pricing that Iran deadline and all the headline risk that comes with it. End result: indexes up, breadth decent, but the market kept every move measured. On the S&P 500 Heatmap, this looked like a broad but pretty moderate rally. A lot of green boxes, but not that wall-to-wall surge that screams all clear. Mega-cap platforms did their job: Apple, Alphabet, Amazon, all in the green, while Tesla was the obvious red drag. Nvidia was basically flat, and the weaker spots showed up in healthcare and utilities. That heatmap lined up almost perfectly with money flow. Leadership came from communication services and energy, with industrials and financials really joining in. Staples were green too, and that matters here because it matches the tone of the session: upside exposure but with a seatbelt on. Meanwhile, healthcare and utilities lagged, looking more like a positioning shift than a full-on risk-off stampede. All day the trade felt like a tightrope act. Risk on was working, but nobody wanted to be the last buyer before a geopolitics headline hit. What really stood out was dispersion. Energy and defense stayed bid like hedges, while some high beta pockets still took real damage. Buyers kept control, but they did it by keeping the rally broad and very measured. There wasn't a specific verified catalyst on the tape today, but the speculative story hanging over everything was that Iran and Strait of Hormuz deadline, traders gaming out headline risk, and how it might keep an oil risk premium alive. And the way defense and energy traded looked like classic tail risk positioning. But that's an inference from price action, not a confirmed driver. Tesla was the standout drag, down just over 2%, and it mattered because it was so visible on an otherwise constructive day. The note here is simple: selective risk on. Amazon was up while Tesla sank, a clean discretionary split. The pressure in Tesla was seen as stock-specific after those early April delivery and sales disappointment headlines. Exxon Mobil was up about 1 2/3%, riding that steady energy bid. Today, Exxon traded like a clean read on the oil tape. Crude stayed elevated with geopolitical uncertainty, keeping a risk premium in the background, and that feeds the broader tension. Energy strength can quietly stoke inflation anxiety, even on a green day for stocks. Lockheed Martin jumped about 2.5%. The backdrop was heightened geopolitical tension, but the key is how it traded. When defense leads while the indexes are green, it usually reads like a hedge bid. Traders are buying upside and paying for protection at the same time. Nvidia was basically flat, up a touch, around 0.1%, and that was part of the internal story. With Nvidia quiet while other chip names moved more, it reinforced a rotation inside semiconductors instead of a one trade: buy the AI beta stampede. Supermicro was the real damage point, down almost 5%. That's high beta AI infrastructure under pressure, with margin and guidance sensitivity still hanging over it. And even with the indexes green, this is the kind of drop traders watch to decide if risk appetite is truly broad or just hiding in the most liquid winners. GBTC popped just over 4% alongside a firmer Bitcoin tape, trading around the 69,000 area. It's a handy real-time risk sentiment gauge, and it stood out versus the rest of the session. Geopolitics kept traders cautious, but parts of the speculative complex still found a bid. Looking ahead, the near-term driver is still the headline tape around Iran and the Strait of Hormuz. For positioning, keep it simple. Does Tesla stabilize or keep leaking? Does Nvidia stay steady? And does Supermicro find any footing after that sharp drop? On the hedge side, watch whether Exxon Mobil and Lockheed Martin stay bid or start to fade. And on the calendar next week, you've got core PPI and PPI, the Empire State Survey, the Philly Fed Survey, and weekly unemployment claims. So we wrap it there: a green day, but not a carefree one. Breadth helped, megacaps did their job, and you still saw the helmet on: energy and defense strength and real dispersion in high beta names. Heading into the next session, the question is follow through. Does this cautious bid broaden out, or does headline risk tighten everything back up? Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.